Welcome everyone in Finance for Engineers course. As discussed in the previous unit, the financial statement, that is, the balance sheet, income statement, and the cash flow statement of a firm are the most important financial reports, and these collectively represent the financial health of the firm. Basically, a financial statement is a compilation of financial and accounting data, which is logically and consistently organized according to some generally accepted accounting principle. Its purpose is to convey an understanding of financial aspects of a business unit. It may show the financial position at a particular moment of time in the form of balance sheet or may reveal the financial flow over a given period of time in the form of an income statement. Cash flow statement gives us an idea about the inflow and outflow of cash in the business during a particular period. Financial statements are major tools through an enterprise presents its financial performance and financial conditions to the various interested parties such as shareholders, creditors, bankers, managers, and investors. Now, let us start with the next unit, that is, second unit, analyzing the health of a firm. Here, you must have understood that health of a firm is concerned with financial aspects. That is, here we are going to study how to analyze the financial health of a firm, why to analyze financial health of a firm. Knowing how to determine the financial health of a company is a vital business skill. If you are an entrepreneur or business owner, you need to know how your company is performing for several reasons. Having a clear picture of financial health can help you make more informed decisions about your organization's direction and how resources are allocated. Similarly, if you plan to attract investors or seek financing, you need to speak about financial health of your business. If you are a manager, you need to understand the financial health of your organization so you can better direct your team. Knowledge of your company's financial health can also benefit you as an employee. By understanding your employer is doing well, you can ask for a promotion or raise at the right time. When you recognize your employer is struggling, you can take steps to either demonstrate your worth or seek employment elsewhere. While there are many metrics you can use to evaluate financial health of the business, one of the surest means is through financial statement analysis. Here is a look at the different types of analysis you can conduct to gain a better understanding of your company's financial health. So let us start with understanding what is the meaning of financial analysis. Financial analysis is a process of identifying the financial strengths and weaknesses of the firm by properly establishing relationships between the items of the balance sheet and the profit and loss account. It contains lot of information, but the way it is presented, it does not convey much meaning. Therefore, for meaningful analysis, it is always necessary that the figures should be properly arranged. Usually, instead of the two column, that is T form statement, the statements are prepared in single, that is vertical format column, which should throw up significant figures by adding or subtracting. The information obtained from this analysis can benefit decision making for internal and external stakeholders and can give a company valuable information on overall performance and specific areas for improvement. The analysis can help them with budgeting, deciding where to cut costs, how to increase revenues, and future capital investment opportunities. Financial analysis can be used as a preliminary screening tool in the selection of stocks in the secondary market. It can also be used as a forecasting tool of future financial performance. It may be used as a process of evaluation and diagnosis of managerial, operating, or other problem areas. Thus, it can be said that financial statement analysis consists of the application of analytical tools and techniques to financial data to derive meaningful measurements and relationships that are useful for decision making. There are certain objectives of analysis of financial statement. They are to assess the current profitability and operational efficiency of the firm as a whole, as well as its different departments, so as to judge the financial health of the firm. Next, to ascertain the relative importance of different components of the financial position of the firm, to identify the reasons for change in the profitability financial position of the firm, to judge the ability of the firm to repay its debt and assessing the short term as well as the long term liability position of the firm. Now, let us start with the techniques of analyzing health of a firm. These are the various techniques used for analyzing the financial statements, which help us to understand what is the strength of the organization, where the organization is lagging behind. So, one can use comparative financial statement, other is common size statement, next is trend analysis, and finally ratio analysis. So these are the four very important techniques used to analyze the financial performance, financial position of the organization. So let us start with comparative financial statement. It is a simple method of tracing periodic changes in the financial performance of a company. Preparing comparative financial statements is the most commonly used technique for analyzing financial statements. This technique determines the profitability and financial position of a business by comparing financial statements for two or more time periods. Hence, this technique is also termed as horizontal analysis. Formula used for calculating percentage change while preparing this comparative financial statement is percentage change is equal to absolute increase or decrease divided by first year amount into 100. So by using this formula, we can calculate the percentage change in the amount, whether it has increased or decreased, doesn't matter. Percentage is here very important for us for making decision. Types of comparative statements. Two types are there. First is comparative income statement and second is comparative balance sheet. So let us see comparative income statement. Income statement provide the detailed information about the results of the operations of the business. That is, this is a statement where we can see how much income the firm has earned and what are the different expenses incurred by the organization. And comparative income statement provide the progress made by the business over a period of time or a few years. This statement also helps in ascertaining the changes that occur in each line item of the income statement over different periods. The comparative income statement not only shows the operational efficiency of the business but also helps in comparing the results with the competitors over different time periods. This is possible by comparing the operational data spanning multiple periods of accounting. That means here, while preparing this comparative income statement, it is necessary to have data of more than 1 year or the data of two organization or more. If we have two organization, we can compare the data of two organization and we can come to know that what is the efficiency of the organization. So what to study while analyzing a comparative income statement? First, comparing sales with cost of goods sold. Changes in the sales in the given accounting period should be compared with the changes in the cost of goods sold for the same accounting period. Now, cost of goods sold is nothing but the expenses incurred on the goods while manufacturing phase or its trading phase. So, by comparing this, we come to know that what is the position, how much increase is there in case of sales or in the business during a given accounting period. Second is change in operating profit. Change in operating profit should be analyzed. Operating profit can be derived when we deduct all the operating expenses from the gross profit. So here we come to know that by day-to-day activities, how much profit we have earned during this particular accounting year. Next is the profitability of a business. Understanding the overall profitability of a business concern, taking into consideration the changes in the net profit of the given accounting period. That means here we can compare earlier or previous year's profit with the current year profit. And then one can say that there is an increase in a profitability of the business or there is a decrease in a profitability of the business. And one can analyze the reason even because various expenses are mentioned and we can see easily in that particular statement that which expenses has increased and which expenses have reduced. So by this way, we can compare the profitability of the business, the operating efficiency of the organization, of the management. About the comparative balance sheet. Comparative balance sheet analyzes the asset and liabilities of the business for the current year and also compares the increase or decrease in them in relative as well as absolute parameters. A comparative balance sheet not only provides the state of assets and liabilities in different time periods, but it also provides the changes that have taken place in individual assets and liabilities over different accounting periods. What to study while analyzing a comparative balance sheet? A business owner or a financial manager should study the following aspects of comparative balance sheet. First is working capital. Working capital refers to the excess of current assets over current liabilities. This helps a financial manager or a business owner to know about the liquidity position of the business. We have seen in earlier unit that working capital is concerned with the capital required for day-to-day operations of the organization. So it is very significant to have a proper capital management and a optimum level of working capital with the business. Second is changes in long-term assets, liabilities, and capital. The next component that a finance manager or a business owner needs to analyze is the changes in the fixed asset, long-term liabilities, and capital of a business. This analysis helps each of the stakeholders to understand the long-term financial position of a business. And this is required for making important decisions concerned with investment in a particular company, that is, purchasing shares of the company or providing credit to the particular business, etc. Now, let us start with the first example where it is expected that to prepare a comparative balance sheet of TCS Limited and offer your comment. So, in this example, you can see information given is concerned with sources of fund statement. That is, this information is given in a vertical form of balance sheet. Sources of fund statement, if you see all the items mentioned here are concerned with liability side of the balance sheet. The data is given is of 2 years, that is 2009 and 2010. You can see here in a particular column, first point mentioned is total share capital. That is, the total amount of share capital invested in TCS company in the year 2009 is 198, while in 2010 it is 296. That means we can see here there is increase in a total share capital. Further moving ahead, we can see that equity share capital figure in 2009 it is 98 and in 2010 it is 196. That means there is significant increase in the amount of equity share capital. Next is preference share capital. The amount remains same in both the years 2009 and 2010. It is 100. Then reserves. Reserve, we know that it is an amount kept aside by the firm for future unforeseen expenses or for expansion or diversification, modernization purpose. So the reserve here, you can see huge amount we can see it is 13,248 in 2009 and in the year 2010 it is 14,821. So there is significant increase in a reserve. Next is net worth. So amount of net worth is 13,446. It has increased in 2010 to 15,117. So what is net worth? You can see here net worth is total share capital plus reserve. So it is an addition of share capital, total share capital and reserve. Then the next point is secured loan. The amount of secured loan in 2009 is 33 and in the year 2010 it is 29. Unsecured loan in 2009 it is 8 and it has decreased to 6 in the year 2010. Now the next point is total debt. Total debt is addition of secured and unsecured loan. So here total debt shows 41 in the year 2009 and in the year 2010 it is 35. And thus the total liability figure is 13,487 in the year 2009 and in 2010 it is 15,152. So by looking at this particular sources of fund statement, we understood that yes, there is increase in total liabilities of the organization. We can see that equity share capital has increased significantly. Then there is increase in a reserve of the company and decrease in total debt. But only saying this is not sufficient. If we convert it in a percentage, then it gives us idea that by what percent the change has happened and whether that is good or bad. What must be the reason that is needed to be identified. So this is the data concerned with sources of fund statement of TCS Company Limited. So here total liabilities arrived by adding net worth to the total debt. So net worth plus total debt is equal to total liabilities. Now the next statement is concerned with application of fund statement. This is asset side of the balance sheet. While we prepare in a vertical statement, we call it as a application of fund statement. Again, the amount given is in a crores. Now here you can see 2-year data again, 2009 and 2010. That means for comparison, they have given 2 years to us. It starts with gross block. Now, this gross block is concerned with a fixed asset. Then depreciation on that particular fixed asset and net block. So depreciation is deducted from gross block and we arrived at net block, that is net asset, net amount of fixed asset, we can say it as a. And in 2009, you can see 2669 and in 2010, 2761. That means slight increase is there in amount of fixed asset. Then capital work in progress, significant increase is there from 685 to 941. Then investment 5937 to 7892. Investment is normally um, made by the organization, by the business firm in the shares or fixed deposits in banks or purchased shares of the other company. So that is an investment, and normally it is expected that it should be for a longer period of time. Next is inventory, that is the closing stock. So you can see here in 2009 it is 17, in 2010 it is only 7. Then debtors, cash at bank, loans and advances, fixed deposit. Now, this fixed deposit is for a short period of time. That is, it may be concerned with only 6 months or it can be only for 1 year. So that's why it is called as a short term investment. So total current asset is shown separately. That is an addition of inventory, debtors, cash at bank, loans and advances, and fixed deposit. All these are current asset. That means investment is not a current asset. After that, inventory comes. Inventory is a current asset. That is, what is current asset? The value or the balance of this particular uh, asset fluctuate during a particular accounting year. So inventory always changes. The amount of inventory go on changing because we purchase, we use, we sell. So that's why the amount of inventory changes. Debtors are the people, are the customers who have purchased material from us on a credit basis. So there are many customers and they purchase frequently from us and they pay us money whenever there is a due date. So the balance of debtors again fluctuate during a particular accounting year. Again, cash at bank, yes, definitely. We issue checks, we receive checks. So the balance here also go on changing during a particular year. Loan and advances. This is a short-term loan we have given to other parties or advances given to other parties, and the balance of it also fluctuates. Fixed deposit, as it is for a short period of time, we may invest in uh, any bank or anywhere for a short period of time and we may withdraw that if there is requirement. So it is for a short period of time. So that's why it is a current asset. So total of this is 9251 in the year 2009 and in the year 2010 it is 10,837. Less current liabilities and provisions. So current liabilities, again, the same case, the balance of these liabilities fluctuate during a particular accounting year. So that's why they are called as a current liabilities. And here you can see the balance of the same is 5054 in the year 2009 and in 2010 it is 7279. So there is much difference in the both year balance. And then the next point is net current asset. Now, what is this net current asset? When we deduct current liabilities from the current asset. we arrive at net current asset. The amount is here 4196 in 2009 and 3558 in the year 2010. So the total asset figure remains same with the or it equals to the total liability amount. It is same 13,487 and in the year 2010 it is 15,152. So it equals to total liabilities. So our liability and assets have a equal balance. Now, how we calculated this total asset figure? See, we have added net block, then capital work in progress, then investment into net current assets. So addition of net block of fixed assets, capital work in progress, investment and net current asset gives you the total asset figure. Now next is the solution. Let us see how to prepare the comparative balance sheet statement. So this is a solution. In this format, we have to present a data. These are the columns we have to create while preparing this comparative balance sheet statement. So on the top, we are writing in the books of TCS Company Limited because this data is concerned with TCS Company. So that's why we have written that in the books of TCS Company Limited. Comparative balance sheet as on 31st March 2009 and 2010. So this is a comparative statement and we have to mention the year for which we have prepared this comparative statement. So it is 31st March 2009 and 2010. And this is the sources of fund statement. We have to mention clearly that is rupees in crores. Now you can see first three column remain same, which we have seen in example. Two more additional columns we have created here, that is absolute increase or decrease, and the next column we have added here is percentage change. So let us see how this problem we have to solve, how these figures we have arrived at. So first is total share capital. Already the figure given to us, that is 198 for 2009 and 296 for 2010. So then we calculated absolute increase or decrease. So by looking at the figure, we will come to know that yes, it is increased. That means here we are deducting the amount of 2009 from the 2010. That means previous year amount we are deducting from the current year figure or amount. So here absolute increase or decrease. So if it is increased, we will write simply the figure whatever we are arriving at. If there is a decrease, you can see that some figures I have written in a bracket. So bracket indicates the decrease in the amount. So in case of total share capital, the amount has increased by 98. So that's why there is no bracket because it has increased. Then percentage change. The formula is already shown to you that we have to compare the data with earlier year. So by using that formula, we have calculated percentage change. Absolute increase in a particular year, that is 98. into 100 divided by 198. That is the previous year's amount. So absolute increase decrease divided by previous year amount into 100. It gives us percentage change. And here it is 49.49%. There is no need to show percentage sign because on the top we have already shown this. We have written that it is in a percentage. So like this, we have to calculate for all the figures, all the particulars, all the line items. And here you can see in case of equity share capital, 100% increase is there. Preference share capital remained the same. So there is no increase in absolute and in percentage. In case of reserve, we can see 1573 is the increase, absolute increase, and in percentage, it is 11.87%. Net worth has increased by 1671%, and in percentage, it is 12.43. In case of secured loan, it has decreased from 33 to 29. Percentage, it is 12.12%. So again in percentage also, we have to mention it in a bracket. So whenever we see a bracket, we come to know that there is decrease. And if there is no bracket, that means it is increase. It indicates that the amount has increased. The percentage is in a indicate increase in a particular amount. Next is unsecured loan. Same, it has decreased. And in percentage, we can see 25% decrease. So by this way, total liabilities shows absolute increase 1665 and percentage change is 12.35%. So in this way, we have to present a comparative balance sheet. The thing to keep in mind is increase we have to show lane, and in case of decrease we have to present it in a bracket. In the same way, we will prepare a statement concerned with application of funds. So this is application of fund statement. You can see here first three columns are same, that is particulars, amount of 2009, amount given for 2010, and then add two additional columns which are very important for us, which will help us to understand what is the percentage increase or decrease in the given item. So absolute increase and decrease tells us about the data that how much amount has got invested more or how much amount is less in that particular year utilized for a particular asset. So see here, one by one, gross block increased, depreciation also increased, net block increased, capital WIP, that is work in progress, increased, investment also increased, inventory has decreased, debtors show decrease in amount, cash at bank decreased. We are just comparing current year data with the earlier year data. We have just deducted previous year data from the current year data amount, and we have arrived at this absolute increase or decrease. So by this way, we have arrived at absolute increase and decrease, and then we calculated percentage change. That is how much percentage it has increased or how much percentage it has decreased when compared with the previous year amount. We are comparing these with the previous year figures amount. Okay, so same formula we will use here, and here you can see percentage change. And when we look at percentage, we come to know that yes, there is drastic change. Significant amount has got invested, significant amount has realized. Such interpretation we can give by looking at these percentage figures. So there are certain figures which show bracket, that means decrease in a amount invested in that particular asset. So this is application of fund statement, and after this it is expected that we should comment on, we should interpret whatever we have learned, whatever we have understood by doing this exercise, by applying this technique, what we understood, what are the takeaways from this particular statement, we have to mention in the form of comments or interpretation on the comparative balance sheet. So it is always expected that one should comment on the financial position of the organization. And through that comment only one can understand that what is the managerial efficiency of the organization, how the management people are taking decisions, whether they are favorable or unfavorable. So let us see the comments on this. So here, first comment is concerned with the asset and liability total. The company is having healthy growth in their asset and liability by 12.35%, which at the end we have seen that 12.35% change is in liability as well as in a asset total. So that is a good sign. So we have to highlight this particular aspect that yes, the company has increased its asset as well as liability. Then the company must have issued equity shares as it shows 100% increase. So that is visible in a sources of fund statement. In sources of fund statement, we have seen that 100% increase was there in case of equity shares. So we have to highlight that, and we can assume, we can give our comment that it can be due to issue of bonus shares. That means what, company must have issued bonus shares in the ratio 1:1 ratio. That means the company has earned good profit. And how can I say that company has earned good profit? By looking at the reserve. The reserve has also increased. Okay, that means the company has earned good profit, and a part of that profit the company must have kept as reserve. Okay, and through that the company must have issued bonus shares to the equity shareholders, and that's why 100% increase is uh, visible in a balance sheet. Next is there is increase in total debt, which indicate the repayment of secured and unsecured loan. So we can see that through the statement that there is a decrease in a total debt, that is secured as well as unsecured. Both the debts shows decrease in a amount. That means the company must have repaid their loan. Not all the amount they have repaid, but some part of it they must have repaid. So that's why we have to we have done a comment on this, that there is a decrease in total debt, which indicate the repayment of secured and unsecured loan. Next is there is decrease of cash balance. So cash balance has decreased significantly. The amount is 55.83% and significant increase in fixed deposit by 183.02%. That means some part of cash balance the company must have used as to keep fixed deposit with the bank. So this is our assumption. We feel that it must have done by the firm. So that's why we are just highlighting the important aspects which we feel that we should mention. It is very important while taking decisions. So whatever we feel that yes, this is something important, this is very significant for decision making. So that point we have to mention as a comment or interpretation. There is no need to write each and every point. There is no need to highlight each and every increase or decrease in comment section. But certain factors which we feel that yes, this is a significant amount which may affect on the decision making of stakeholder, we should highlight that, we should mention it. And the next is there is substantial decrease in a inventory. So whatever I feel that yes, it is very important. I have mentioned here as a comment. So keep in mind there is no need to comment on each and every increase, whether it is a percentage increase or percentage decrease, but identify the important factors, important aspects. The significant amount has increased over there, significant amount is utilized for asset. So we have to highlight that. So this is the first example where we have seen how to apply the comparative technique for the balance sheet statement to analyze it and what different columns we have to apply. And after applying, how to comment on these statements. So here I am ending my session and uh, we will continue the same technique and also we will see the another technique used for financial analysis in a next lecture. Thank you.